All right. Well, welcome to February the 13th. It is Tuesday, and just before market open at 9:16 Eastern Time, we've got a snowstorm causing some travel concerns and issues in the Northeast United States, but no snow down here in Cabo. So, what do we have going on today? The US announced higher than expected CPI today. I think it came in at 3.9 instead of 3.7%. So that has an impact on um, people's beliefs in when the US Federal Reserve will start to lower interest rates. And being that that puts that into concern because it's not really in line with what the US Fed has been calling the soft landing numbers. So it's not going down at the rate that, or arriving at the rate that they're expecting it to, that would allow them to reduce interest rates going into the early part of the year. I think there's now skepticism that, first of all, in January, when Fed Powell came out and started talking, I think it was pretty much confirmed that the Fed was not going to reduce rates in March. And now I think there's fear that rate reductions are being pushed out even further towards the middle to end of this year, based on concerns with the data coming in. Now, it's only one data point, so it's just a way for people to interpret that data point. But what that has led to is futures are way down. NASDAQ, I think, is off 300 points. The Dow is off 200 to 300 points. I mean, this is all pre open, so these numbers are going to change. But basically, it looks like the markets are going to open lower. And where we can see that is when we go through our list of stocks. So we can see that almost everything in our list is down and in the red. Um, where we have a little bit of hope is certainly in oil, and oil was one of the reasons, or the increasing price of oil is one of the reasons that CPI was up. So you can see that crude down at the bottom there is up. The March 24th futures are up 70 cents. So that bodes well for some of our oil stocks. And going into the day, we've got Exxon up 23, now 13 cents, and Chevron up 45 cents. Again, all pre-market, but it's giving you kind of an indicator as we head into the open as to what oil stocks may be able to do today. So oil may be one of the stronger sectors. Where we're getting extremely hardly hit, which is overdue, and we knew there was going to be a correction of some sort, is in tech. And normally when interest rates rise or are held steady, it does hurt tech. And it's not the most easy to understand concept, so I'm not going to get into explaining that at this point. But you can see a lot of these names. So Palo Alto off $11 from its 371. Net is down $5, almost $6. You've got some of the indexes off here. The QQQ is off. The VGT is off. Airbnb, which is set to announce results after market today, is down $5 pre-market. It was up 6 yesterday, so it's still up based on the 1 or 2 day range there. Microsoft's off almost $10. Again, this may present a buying opportunity. I would be very hesitant to jump in right away. There is more data coming out this week, and I would be very reluctant to buy or start a buy and hold strategy today. If you're looking to average in to the market and buy a certain amount monthly, then this sort of thing should not be a concern for you. If you're putting $100 or $1,000, whatever the amount of money is, in on a month-to-month basis, today would be a great day to make a purchase because you're getting some deals at a discount. Shopify, I believe they announced this morning, they came in, they did not have, they had great earnings, but their forward guidance was a little lower than maybe expected by some of the analysts and traders. So, being a Toronto stock, they don't show pre-market movement, but you can see AMD is down. A lot of these stocks, as we scroll through, are down, and some of them down significantly. But those that are down significantly have obviously had pretty high moves to the upside. So you see a drop of, let's say, $26.90 for AVGO Broadcom here. And that's only because it kind of moves up and down $28 to $50 some days. So, and it's $1,000 or $1,200 stock. So as we scroll down, again, Meta down at 469, we'll call it. Um, this is a great stock. It's a money generating powerhouse, Facebook, known as Meta. So this could be an opportunity to slowly dollar cost average into a position here. And it could be an opportunity to pick up other great names like NVIDIA, although there is some skepticism at where it's priced right now. ARM is off as well. I talked recently, and I really think a lot of ARM. I think it's completely overvalued at double what it was last week, and having a 50% jump again yesterday. So basically two 50% jumps in the course of 4 or 5 trading days. Definitely overvalued, but it's dropping, and maybe there's an entry point to come here. So the things that I'm looking at today, I'm looking at where tech goes and following some of those names. Adobe has results coming up. So if we look at earnings, they're announcing mid-March, and Adobe is a strong software as a service company. They've made a great transition, as many companies in software have, to software as a service, having consistent monthly and annual revenue, growing their user base, and having a great product to deliver to customers. And with the ongoing, call it adoption of folks on TikTok and creators on YouTube, their products help with a lot of what those individuals are doing to support their initiatives and their businesses. So I think this is a very strong stock. I think it's got a lot of potential. They have a lot of cash. There's a lot going for Adobe, and if you can get this in the 500s, which it looks like it's going to open in, I think it's a steal of a deal because it should come back to the mid 600s. That said, would I put all my money into it in one purchase? No. I'd slowly move into it and see what it does, and really wait to see what the first 15 to 30 minutes of trading pans out to. You'll also see that a lot of the financials are off. So we've got some of the financials down. One of them that went up a lot yesterday, MTB, M&T Bank. It's off more than it went up yesterday, so not surprising there. I think the blip or the jump yesterday was more of a surprise based on some of the fears with regionals and it being one of the larger regionals, but still a regional at that with the commercial loans. Goldman, I think, hit a peak yesterday at 396. Great point to exit there in the mid-afternoon. And then today it's off $5 or almost $6. So there could be some entry points here with some of the stronger stocks to look at, or anything that's due reporting, although most of these, I believe, have reported other than the Canadian banks at this point. Some of the regionals will take a bigger hit today, I think, than some of the other banks. So Bank of California, it's going to be down near the low 13s. If that drops into the 12s, I think that could be a good buy. I'm keeping my eye on SoFi. If it drops into the low 7s or even high 6s, certainly an attractive purchase there and something that I would look to pick up and add to the portfolio. So there's going to be a lot of movement today, a lot of volatility. Just be cautious if you're going to make a move today, and look at the charts, look at the movement, try to identify kind of the range in which that stock is trading before you make a move. Try not to get in at a high point in the range. Wait for it to come back to a low point, and then follow other indicators. So with oil, we like to follow the price of crude to see what it's doing. If it's moving up, it should lift all boats and allow the other oil stocks to make a move up as well. But also look at the overall indexes. So as the indexes go higher or go lower, use that as a means of trying to figure out whether the stocks that are a part of that index are trending in the same or opposite direction. So that would be my guidance for February 13th. Not an unusual day. In fact, as an active trader, a day trader, lots of volume and lots of activity means lots of opportunities. So good luck with your trading today.